Hi, it's Rich Hoffman here. I don't think there's been anything that Trump has had to do different to save the stock market. There's a lot of hard things that have to happen regarding the stock market, because we've been talking about this for a while. It was propped up with a lot of phony money, and I know Trump has wanted to take credit for a good stock market, and people tend to invest when they are happy and have money to invest. But the nature of investing isn't a stable environment. So you can't get into this whole idea that the government's job is to protect your investments. The whole goal of investing and making money, becoming wealthy off investments, is the greater the risk, you tend to have greater reward. So taking big risks is part of it, but taking big risks and being a big spender and putting a lot of money into things only to have the government guarantee that investment isn't how the game works. And a lot of people have been very unstable because they're worried that Trump's economic policies are going to take too long to kick in, that his job is to protect the stock market from volatile changes, and that's just not how this is going to go down. I hate to break it to everybody, but we didn't elect Trump to protect inflated investment dollars. The way you have to look at the stock market, it's gambling at best. It's a casino. Jack Posobiec and some of the War Room people have properly designated it that way, and I think it's important to remind everybody that the government's job, or Trump's job, is not to make sure that your risky investments are going to stabilize, and that we have to prop up this phony value that's occurred in the stock market, like a slot machine in a casino. If someone hasn't hit it in a while and it's built up for a long time, you never know where the magic lineup's going to occur, where everything lines up and you get the jackpot. That's the risk, and the reward is that it fell in your favor. That's where the thrill comes from. The Wall Street is not capable of setting monetary policy, and the level of the stock market, even though that's an indicator that people sort of understand, when they watch the news and they see the stock tickers and they see where the value of something is, that perceived value is only worth what people can pay for it. And if it all of a sudden had a collapsed economy where people couldn't afford to pay for anything, then that value for that ballooned estimate is going to collapse on itself. So this war with China, which is definitely a financial one, and was one that has to happen, and people can say what they want to say about how you engage in conflict with someone who's in conflict with you. It is not your obligation to maintain some sort of stable order to avoid the conflict so you can protect some casino jackpot. Stocks, as they are exchanged and traded, is simply, they only increase if people are willing to keep spending money to buy those values. And the government guarantees are not the way that you get there. So that's a major misconception of what and who should motivate government action. And one of the reasons why I've kicked the can down the road so much on so many issues that need to be solved is because people understand investments through their 401ks. They want to protect what they think is retirement value, but it's all built on a phony promise that if you keep going to the casino, you're going to hit it big eventually, and you're going to get a lot of money for it. But that's kind of the lure of the casino to begin with, is the promise of easy money, the promise that you can put money in at this level and it perpetually goes up. And anything that destabilizes that is going to make you feel insecure, and maybe you won't support the Trump administration anymore, or support Republican politics. People are worried about the cause and effect on a perceived value that doesn't really have a whole lot of merit in reality. And the way that you look at the stock market is that it's all a casino. It's all a gambling house. None of it is built on the true exchange rate of a value or service. It's all about who owns what and whether or not they get to recover at a profit of that ownership to the next buyer, to the next owner. The way you play the stock market is you buy when it's low. You when people are panicky and all over the place, that's where the smart ones buy up. You save your money until people are out there panicking and selling, and you buy low and you sell high. That's like everything in life. You should play it like that, but you should treat it like a casino and not try to build policy around a upward trajectory and not having any kind of issues of a volatile nature around the world, so that your stocks stabilize as an investment. Because the Chinese know that's what you're doing. They know how to hit you, they know how to harm you, and they know how to harm your political system if nobody ever has a stomach to deal with the reality of what some of these problems are in the world. And clearly it's when Trump did the tariffs and everybody was buying and selling in a very volatile way from day to day. It makes it very hard for him to negotiate the issues that need to be negotiated if he's worried that people are going to pull the rug out from underneath his feet on support. And I don't think he's all that worried about it. I don't think when he met with Xi Jinping, when they talked about taking away the 125% tariffs and get down to something more reasonable, that I think this is just hard-nosed negotiating against a communist regime that's used to getting its way all the time. And if they show a little leg and they're willing to take away some of their ridiculous tariffs, that's fine. You know, in the case of negotiations, you start with some ridiculous place and then you work your way to some deal where everybody can agree on something. And Trump plays that game very well. But if he's worried that people are going to not support him over the price of stock or the stock market going down, and they're going to hit him in the financial media as Trump's causing the Great Depression, none of that is new. This is something that he inherited, this garbage that was falsely propped up. I talk about the Fed falsely propping it up with modern monetary theory, quantitative easing, and what was bought with that money that gave an artificial inflation, no different than a housing crisis of 2008. They've done that with everything in the market. Everything's a bubble. Everything's been inflated so they can show a positive stock price. Then you have these big money managers who come in and buy up all the assets like BlackRock, and they give a phony value so they can control the board with progressive politics, and people who are just normal day traders think that value represents something, and all it is a casino. All it is a slot machine. All it is playing blackjack or poker, and you play with a bunch of cards and you hope your values hold up, but it's all gambling. And the entire Wall Street stock market is a casino. It's nothing more reliable than that. You can't build the monetary policy of a country around it. It's dangerous to even conceive to do so. And yet we have, obviously, for many years built policy around stock value. And I would say to everybody, if you're going to play in that world, expect to lose. Don't go into the stock market expecting to win. If you win something big and have a nice vacation or something, that's great. But if you're building your 401k or if you're building your retirement out of a casino game, you got a problem. The real value for things is what you got to build. You have to build an economy around. You can't build around casino politics, because there's only one party that wins in those exchanges, and that's the house. And who's the house? Wall Street, the brokers, the people who get fees off of winnings, off the exchange. That's who wins. And that's why they want everybody to keep gambling at the table, because that's how they get their money. They get their money by convincing other people to give up their money to play the game. But then you build a game around the politics of your way you organize your monetary policy, and now you got big problems, because it's all built on gambling and not actual value. So I would advise everybody not to panic or freak out, and if you're going to play the game, be prepared to hold your cards through these turbulent times, and don't let China out leverage you because you don't have the patience to fight them toe to toe, because they think it's funny that Americans are so impatient, and they have a bunch of phony money propping their entire economy up, and they think they can use it to manipulate Trump and back him into a corner. And I don't think it's going to work. I think Trump's got everything where he needs it anyway. I don't think it's going to be the case. But if things get a little volatile, it's not Trump's job to make sure that you're stable on risks that you took with the illusion of being a tough investor, a smart investor, when you don't have the guts to hang on to the money, when it's tough for the market to recover. And it may never recover on some of these balloons that have blown up because they were phony to begin with. And that's not the fault of Trump's tariffs. That's the fault of people who believed in a bunch of squishy economic theory that was based on inflated values propped up by a bunch of con artists in a casino. And if you were suckered by it, that's on you. It's not monetary policy that you build your nation around. Should have done it to begin with. Anyways, Rich Hoffman here. Share, subscribe, make tomorrow a better day. If you haven't read my book, The Gunfighter's Guide to Business, I think you'll love it. Anyway, have a good day. See you later.